And Jessica Brady is a financial expert with view.com.au and joins us now this afternoon. Jess, thank you so much for joining us.
Thank you.
Your analysis of interest rates, what's your advice right now? We just heard there from Canberra that a lot of these banks are not going to pass on that cut straight away. Can you go to your lender and say, I want that discount now?
You can go to your lender straight away and ask them to do an assessment. They may not implement it until the end of the month or whatever they're saying, but yes, you absolutely can. So I would contact your mortgage broker or contact your bank and ask them for a rate assessment.
And what about fixed deposits? Because there are a lot of people, especially self-funded retirees, that this interest rate cut is not good news for them. Would they go and ask for a better deal?
Of course, as a market, we always have different levels of competition. So it's important to say, hey, I'm looking for a better rate, and if I don't get one from you, I can go elsewhere.
So what do you think, considering what happened yesterday, that was expected, a cut in the official rate, in the cash rate? Michelle Bullock, pretty sober warning there, don't expect many more to come after this one. Do you think that's true?
Look, I think the finance experts last year said that we would see a rate cut in 2024. We waited and we hoped and we didn't exactly see it. So look, always what I say to people with mortgages is don't bank on a rate cut. Make sure inside your cash flow you have some surplus, so if they in fact go up in the future, you have the money prepared.
And what does your data show? With a cut like this, do you see mortgage holders start to look at their budgets and say, we need to pay off more now because there has been a saving? Because it's only about, on the average mortgage, around $100. That is a lot of money, but $100 a month.
Yeah, I think it gives people options. So they can continue paying the mortgages at the same rate they were. Perhaps that means that they'll be mortgage-free faster, or they can choose to use it to, say, invest their money, or because of the cost of living crisis, they might choose to use it to pay on bills.
Now, in regards to interest rates, often interest rates, which a lot of people have credit card debt, the banks don't seem to act very quickly, if ever, on interest rates on credit cards. What is your advice with credit card debt?
So if you've got what I consider bad debt, which is normally in the double-digit interest rate figures, that generally is always a priority. So we look at the highest level of interest rate debt first to pay down, and then we move to debts that have a lower interest rate.
Okay, and what about the property market? Do you think this is going to... There was a school of thought that one cut will encourage people to be quite confident, and we may see actually more heat start into the property market, which will then push up house prices even more and subsequently rent.
Potentially, look, I think it does two things, capacity and confidence. So it does increase borrowing capacity, meaning you can borrow more, and it does bring those people that were perhaps sitting on the sideline a little bit nervous about if there's going to be rate rises or not back into the market. Of course, the more people that you have in a market, the more the competition, heats up. That may mean that prices go up too.
Absolutely. Jessica, thanks for joining us this afternoon. Much appreciated.